Hello and welcome to Economy and Markets TV, the show that takes you around the world of economic and financial news. I'm your host, Dave Okenquist, Senior Research Analyst here at Dent. It's time to recap the news of the week, which means I bring on Dent co-founder and Senior Editor Rodney Johnson. Rodney, good morning.
Morning, Dave.
Great to have you here as always. As you can all see, I am not in the official Economy and Markets studios. I'm here in Baltimore. So things are going to be a little bit different, but we're going to push through. I cannot see Rodney as normal, so I don't know if that's a good thing or a bad thing, but at this point, I'm just looking in the camera. And this show, we take the top stories of the week, and we try to keep things moving along to 2 minutes. And if Rodney goes over 2 minutes, he will hear this sound. And Rodney, just because I'm traveling doesn't mean you can escape the bell.
There you go.
All right, are you ready to move into the big topic of the week?
Let's go.
All right, great. So U.S. second quarter GDP, it just came out this morning. It rose 4.1%. The first quarter actually got a bump from 2% to 2.2%. Now, the second quarter, the news was that it missed expectations of 4.4%, but that's still over 4%, right, Rodney? So the question is this going to be sustained growth? And what does this mean for what the Fed's going to do?
Right, and those are the questions, right? The 4% growth, the estimates were from 3.8 up to 5.1. And so people say it missed. Yeah, but it's still over 4%, driven by certainly some tax reform where corporations have more money to spend, individuals have more money to spend. So corporate for individual or consumer spending was higher. Also driven by the tariffs, because people were kind of front loading. They were buying the tariff related items, companies buying materials from other nations so that they would escape the tariffs. And so inventories are higher. Question is, will it continue? I don't think so. I've said this for some time. Certainly the tariff bump was transitory, but I also think that the bump from tax reform was a bit transitory as well, because we've got a lot of other things we're still doing in terms of preparing for retirement, paying down debt, and that sort of thing. Right. And so I think we fall back to the typical 2% growth when we get to the third quarter GDP. And that's where the Fed's going to have some questions. The underlying question is inflation, right? So inflation, their measure is core PCE, or personal consumption expenditure. And that came in at 2%, right on top of their target. And so if that goes up, which I think it will from energy costs and wage costs and other things, they're going to have a decision to make. Do they raise rates as they watch GDP growth ease? And that's going to be tricky. So I think we're looking at volatility in the markets based on that as people try to parse all of this information. We won't get clarity on it really until September with the Fed's next big meeting. They have a meeting next week, but the next big one is in September. And in that time, if we see GDP come down and inflation go up, it's going to make things kind of rocky.
Yeah, absolutely. It just sort of strikes me a little funny that here we are, over 4%. It's great to have it, and it almost feels like bad news in a way. And I don't know, that just doesn't sit right with me. At least enjoy the nice print for today, right? And then we'll see what happens later.
There you go. Have a beer and celebrate today, and then let's start worrying at least, maybe August 1. Maybe we get almost a week of this, and then we start worrying about it. Give ourselves a little time.
Yeah, it works for me. All right, Rodney, let's move on to our next topic, which are home sales. Starting with existing home sales, they fell a little more than 0.5% in June and down 2.2% for the year. But that median price that we've been talking about for months now keeps inching up and up. It's up 5%, over 5% for the year. We did see a slight increase in supply, though, didn't we? So what do you make of it? This is the big market, the existing home market.
It is. It's 90% of real estate sales is existing homes, as you might expect. There's some swirling background on this. A big story right now is that foreign buyers are down. Chinese money going into real estate has declined, down by about 20% this year over last year. Is that a factor? Certainly it has to be, right? But the bigger factor is what we've been talking about for several years on this particular program, is that we've been watching prices go higher and wages aren't. And so who are the people buying all of these homes where they can afford to keep paying higher and higher prices? Right. It was very interesting in existing sales that prices did inch up even though sales fell. And so, I don't know, you get some wind out of that market. Hopefully prices come down some, give people a chance to get back into homes. I did see that the home ownership rate has actually ticked up a little bit. And so that's good news. Yeah. But it's been the war of these two trends for some time. We've either got to get prices down, wages up, or meet somewhere in the middle.
Yeah, absolutely. And now moving on to the new home sales angle, those fell over 5% in June, but still up over 2% for the year. But prices actually fell here, and they're more than 4% lower than they were at that point. And we've got an inventory increase there in new home sales, so maybe we can see We're seeing a little bit more clarity in the new home market, Rodney?
Yeah, I don't know about clarity. New homes are very volatile because it is a small part of the market. It's only 10%. And builders can choose, right, what they're going to do. It's not like when you have to move and you choose to move,
Right.
or rather you have to go and do that. And so builders can focus on the area of the market that is actually treating them the best. And so if they're growing the lower end of the market because high-end sales are stalling, you're going to see that median price drop just because they're selling more of the low-end homes or lower priced homes. And so it's really a question of what's going on with builders. I'm more interested in the fact that the number of sales is declining.
Okay.
And so that's not good news. It is up over last year, but not by much, as you noted. So still, I think we're getting into that area where prices are the holdback.
Okay, great stuff there, Rodney. Moving on to the next smaller topics. One thing is the news came out. The IMF expects Venezuelan inflation to reach 1 million %. Now, this is higher than expectations of 20,000%. No, I'm not kidding on either of those numbers. It sounds so funny to say it that way. But we talked about the situation in Venezuela last week with those dog carts or whatever they were called, that new form of public transportation, which is extremely dangerous. Venezuela is just deteriorating and deteriorating by the day, aren't they, Rodney?
They are, and it has big implications. We have to remember Venezuela was the rich country in South America,
Right.
has the largest proven oil reserves on the planet. They aren't producing more because of mismanagement by the government after it nationalized all the assets. And so for them to be at this point is a travesty. And so 1 million % inflation, remember we were talking about our inflation as measured by the Fed at 2% and hitting their target. So 1 million % is one of those unthinkable things.
Yeah.
They've been in the barter system for quite some time because it's almost physically impossible to carry around banknotes. Banknotes actually trade at a premium because it's hard to get them because they can't print the big notes, the 100,000 and the million notes that they need to actually do transactions. And so people are bartering with things like eggs, and eggs hold their value, right? I mean, they're limited in supply by the chickens you got. Everybody knows what it is. It's really hard to fake an egg. So they're trading in eggs, which is a very strange thing. But you do see people fall to barter when the official systems fail.
Crazy. Yeah, I mean, I'm old enough to remember in the mid-2000s when oil was really high and Hugo Chavez was the hero, and I think he even sent some heating oil to some communities in the United States. So how far they've fallen.
Up in the Northeast. You're absolutely right. They sent it to the Northeast through Citgo, but Hugo Chavez supported other areas like Cuba and some of the Central American countries by sending them oil. And so the failure in Venezuela is rippling through that system. I'm not upset to see it ripple through that system, but it is causing widespread issues.
Yeah, absolutely. One last thing. There was some news on Bitcoin last night. Want to tell us a little bit about that, Rodney?
Right. Bitcoin has run up in price. Of course, it fell from 20,000 at the end of last year and was down around 6,500. So lost a good chunk of its value. But in the last week, 2 weeks, it's been moving up substantially. And so a lot of questions on why. One of the big reasons was that there were several applications for new exchange traded funds in Bitcoin. And people were excited that this might happen. So they were getting into the cryptocurrency early, hoping for that application or several of them to be accepted, and then they would be in the driver's seat. Well, last night, the one by the Winklevoss twins, the co-founders of Facebook, was actually denied by the SEC, and so that's brought the cryptocurrencies down today. Does it hold it down? I don't know, but it's certainly a big knock on the currencies when they're not going to get one of these investment funds that would, of course, create wider spread trading and increase the price.
Yeah, something to definitely keep an eye on, the price of Bitcoin, going up and down as it has been. So good little bit of news bit on that. Looking ahead to next week, we've got the U.S. National Home Price Index, we've got the Fed meeting, and then the big one will be next Friday morning, which is the U.S. Employment Situation Report. Anything else on your mind, Rodney?
No, I'm always, every week it's this is the biggest, this is the biggest.
Yeah.
This GDP number was a big number, right?
Yeah.
And then employment was a big number. Employment's always a big number. It's the trend. People just need to remember we're talking about the trends here, and they're the ones that have been modest for a long time with some bumps up and bumps down. We just haven't broken out of this modest growth trend, and it's demographics. It comes back to the big population things that we've talked about for many years in our research. And so Yes, unemployment's going to be big next week, but it is still just one number and a very long trend.
All right, thank you for that 30,000-foot view, Rodney. That's all the time we have for this week. I want to thank everyone for joining us. If you have questions, comments, or any feedback, send them to tv@economyandmarkets.com. We'd love to hear from you. Thank you again, and we'll see you next week.